Okay, guys, today we have on Alex Leishman from River, long thought of as one of the, I think, very well regarded Bitcoin community members, and also somebody who built something very early on that I think has had at least relative to like a lot of other exchanges in the space, has had like a fairly singular focus and has stuck to that. And honestly, somebody should have had on much earlier. Alex, welcome. To like just quick background things. When did you start River? And then going off that, like what did you set out to do when, yeah, like when you decided like to build a product in this vein again with sort of like a specific focus? What was your intention?
So I started River in 2019, and the idea was to build a Bitcoin bank. And that's basically what we've been working towards ever since. We're not technically a federally chartered bank, but directionally, I had this vision that Bitcoin was on a trajectory to become the global reserve asset, and people would save in it, businesses would save in it. And I saw what Coinbase had accomplished and what they built. And I was a very early Coinbase customer, and I thought they were going to do this when they first started. And then they took a very different path. They started going down, focusing on becoming a multi-asset exchange and towards what I would call, I thought was a local maximum. And that sort of opened the door for me to go, well, I guess no one else is doing this, so I'm going to do it. Build this Bitcoin focused version and see what that leads to. I thought that would take longer to sort of grow, but it would, at the end of the day, be the global maximum. And that's the high level idea behind River.
What were you doing, just quickly, what were you doing prior to, like in 2019, what were you doing?
So I've been working in Bitcoin since 2014, more or less, on and off. I worked for a Bitcoin startup in 2014 called MyCoin. It was like Coinbase for Taiwan. I kind of had my crypto phase in 2013, like trading, shit coins on BTCE and Cryptsy and stuff, and like quickly realized like, okay, like Bitcoin really only matters here. And then, so after MyCoin, then I TA'd the first Bitcoin class at Stanford, actually in grad school, with Dan Benet. And then had a short stint at Airbnb, and then joined Polychain. So I was at Polychain, which was like a crypto hedge fund, like one of the first big crypto hedge funds. And I was kind of like the Bitcoin guy there. And I was also doing some engineering for them as well. I was helping build some early custody stuff for various investments, and then left because I just really missed building. And I saw this opportunity to build River, and Polychain led the seed round, actually. So it was a, very, great guys over there, and they were very supportive of my vision.
Yeah, you said you had like your shitcoining phase, I guess, and then you wanted to focus on Bitcoin. What was like, and this was back in 2013, 2014. This is before the vast majority of people have heard of Bitcoin in general. So wait, what was that realization at the time? Like, what was sort of like that crossing that chasm for you?
So I got into Bitcoin because I was really interested in alternate money and like reading Hayek and stuff like this. And then I came across Bitcoin, and I was like, wow, like this fulfills the prophecy. And then I saw these comments about, well, it's blockchain is also important. And, so then I was like, well, what about these things that aren't Bitcoin? And, Data coin and, Prime coin and Feather coin and like all these experiments. And I was like, let's get my hands dirty, play with these. And
Feather coin,
Feather coin, yeah, like,
I remember that one. Yeah. They were like old forks though at the beginning. Like most all of them were like Bitcoin forks until like really like Ripple, and then But anyways, go on.
There was Pure. I think it was like, was it Pure Coin? It was like the first one. And so all these, like, there haven't been like substantially new ideas honestly since then. And so I just got my education really early and like kind of speed ran it, and it just became clear to me like Bitcoin was really the thing here. Blockchains are honestly like very bad at the vast majority of things. Then the ETH thing came along, which I thought was sort of interesting. And then the ICO bubble happened, and I was like, what the heck? Like, kind of years before that, I had come to the conclusion that all this stuff was kind of nonsense, but sort of I think it took the market maybe 10 years to realize that's directionally true. And so that's kind of like, I feel like I'm living in like the twilight zone a little bit for the last decade.
Yeah, definitely. Okay, so then with River, you say like this Bitcoin bank. What does that mean? I know, like, for example, I follow River quite some time. Actually, like, have recommended a bunch of my friends use it. They seem happy. I don't know. But in any case, what does that mean to you?
Yeah.
Like, I mean, I know that you guys have been advocates for self custody, proof of reserves, have done a lot of research with Lightning and sort of the proliferation of, yeah, like Bitcoin building in general. Like, but what does that mean in practice? Like, what stands out there? And then maybe also just to like make it kind of interesting, contrast that with what you saw as this local minima, perhaps with Coinbase, like the direction they went versus like the direction that you went. Not asking you to like necessarily castigate them, but like just maybe contrast.
Totally. Yeah. So basically, long story short, at River, we make it easy to buy Bitcoin, keep it safe. That's like, if you had to sum up our business in one sentence, it's that. But really, there's a lot of nuance there, and the trajectory that our company is on is to be somebody's primary bank account. And we see this future where people and businesses will increasingly save in Bitcoin, but they still often need to spend and earn in dollars. And so we are crafting what I think the future of banking looks like, which is Bitcoin and dollars seamlessly integrated into one app where you can do all of your dollar banking and all of your Bitcoin, whatever it's brokerage, custody, wallet stuff you want, moving Bitcoin around, self-custody, potentially lending, right? All of this stuff in one seamless package that then becomes your bank. And what a bank really is, and we're not, like I said, we're not a federally chartered bank. I mean, that may change someday. We partner with banks to do the fiat side of things. But really what I see ourselves as trying to be for our clients is their primary financial hub, right? Where do they, in their mind, where do I keep my money? And doesn't mean they don't like have investments elsewhere or they don't trade, stocks or altcoins elsewhere, right? But we're like the place where they keep their stack. And that's the role I want to play in our clients' lives. And so we focus a lot on service. That was one of our early wedges, is this realization that Coinbase had this huge chunk of clients that just wanted to buy Bitcoin, and they wanted to buy large amounts of Bitcoin, and they couldn't get anyone on the phone at Coinbase to help them with anything. And that was sort of like the early wedge, was like, let's go to this very valuable segment of the market that just wants to buy and hold Bitcoin and has a terrible experience with customer service at Coinbase because Coinbase has so many things going on. And so that's like the high level sort of vision of River. And, you can imagine as you grow a financial services company like this, a lot of it is just not messing up, right? Like just
gaining trust over time. Yeah,
exactly. Like that's rule number one at River. And I think that's where a lot of companies go wrong in this space. Financial services is all about trust, right? And, they say if you survive, you thrive, right? And I think a lot of people in this industry get impatient and they start taking, like, especially in bear markets, they start getting distracted and taking risks that ends up flying too close to the sun. We just take a very different approach. So yeah. And then your question about like sort of Coinbase being a local maximum versus sort of Bitcoin banking. I mean,
Sorry. Local maximum. Yeah. God,
like
I misspoke with that.
Yeah. I mean, so my view there was Coinbase chased this early opportunity around altcoin trading, right? Realizing they could charge retail 2% to trade back and forth these very volatile, speculative, popular assets, right? And to me, it was always obvious that was never going to last, right? That was always going to be a flash, sort of like a flash in the pan sort of thing. And also, if you look at the financial services industry, exchanges aren't where the money is made. Like the New York Stock Exchange doesn't make that much money compared to the big banks, right? And so it's sort of like a very different sort of approach where, Coinbase wants to be the sort of everything exchange. We want to be the financial institution that the average American wants an account at and wants a relationship with, as Bitcoin continues to become this place people store their wealth.
So just to be clear, and I think this is the case, but you guys the only asset outside of fiat is Bitcoin. Is that correct? Like I know you guys have like some yield programs where you can like hold Bitcoin and receive some yield, like vice versa, sort of different ways to work that. But Bitcoin is the only asset apart from like fiat banking rails with which you guys build.
Correct. And the yield part is just high interest. We pay a high yield interest rate on your dollars and we pay it in Bitcoin. So that's sort of an example of like and there's a lot of things like that we have where like, it's really hard for someone else to do that if they're multi-asset, right? It's It's like just having Bitcoin and dollars, streamlined, deleting this whole degree of freedom of having 1,000 assets allows us to do these much more specialized sort of things like Bitcoin interest on cash. So yeah.
Do you guys have any like stable coin, anything like with regards to stable coins, or like maybe actually just like your take on stable coins in general?
Yeah, so I'm not anti-stablecoin. I mean, honestly, I kind of I kind of don't even like the terminology. Like to me, I just view it as dollars. And it's like, okay, dollars have infinite product market fit, and KYC free dollars have infinitely more product market fit.
Yeah.
And so, but outside of the US, right? Americans don't really care about stable coins because they have bank accounts and they kind of have all their needs filled. So I think like my take on stable coins is they're massive. They have amazing product market fit outside of the US, especially in places with crappy currencies. And it's kind of that simple, right? And so we don't really support anything stablecoin today because there just isn't much demand from our clients because we really only operate in the US. To the extent that stablecoins really continue to take off and like sort of maybe the WhatsAppification, starts to happen where like all the international people use it and then slowly Americans reluctantly start to use it because, there's some network effect. Like maybe we'll start integrating at that point because our clients will want to be able to send and receive dollars. The way I would build it is not like you would have a new asset at River. It would just be
just dollars,
just a rail to get dollars in and out, right?
Yeah.
So
it's really fascinating to hear you say that because I am of the same opinion. Like it would be much more descriptive if we just called them KYC dollars. Like it's not, I don't know what really is all that unique about the stablecoin aspect, like with regards to crypto rails. In fact, I think we've gotten to
literally eCash.
Right. Yeah. I mean, eCash would be a better system, like more than likely it'd be more private, but I don't think, I mean, it's just like that really hasn't reached much escape velocity. So maybe it will in the future, but yeah, no, I agree. Like, but it's interesting because that is maybe the biggest fixation of crypto now. So like just to hear, like you kind of voice similar, I mean, it's not really clear to me what stablecoins have to do with crypto. Really, like the rails upon which they run, assuming that they're just more seamless and KYC free. Yeah, it's like it doesn't really have much to do with crypto at all. So I'm also and the fact that you are in the US makes a lot of sense. I think more recently, last note on this is like there's been this huge push for Americans to care about stablecoins, and it's like I'm not going to be goaded into caring about these when like we have the most efficient like capital markets in the world. And so we don't need them. And like, it's not on me, to pretend like I care about these things. I don't think they're very useful for us. And it's like dollar expansion hegemony is not very interesting to us. So it's like quite weird, like just the direction to which this has gone and become like forced down our throats.
I think there's a relatively simple explanation, which is that it is downstream of crypto at like altcoins, like not mattering. And so all of this energy and capital that went into blockchains needs somewhere to go. And so then now everyone is pushing like, okay, well, if it's not going to be, this ICO that I dumped on retail, then it's going to be, taking on Visa. And then, they try and come up with narratives like, oh, it's all going to be agentic payments, stable. And it's like, well, I'm not going to say never, but I think that what this all lacks is like name the pressing problem you are solving for somebody. And it always just kind of falls flat inside the
Certainly inside the US. In fact, like it's kind of jarring, I think, especially most recently with the regulatory landscape and like some assumptions that we're making great strides, and that like one of the big hangups, I guess, to this Clarity Act, right, is this stablecoin yield thing. It's like such a marginal, it really is. I wouldn't even call it a marginal improvement for anybody in the US. Most stablecoin yields are less than like treasury bills. So like, and you basically have to make the leap that the US customer will convert their bank accounts to stablecoins in order to make this yield thing a huge deal, which maybe there is like some forcing function to put pressure on banks to pay out yield, but like it's so negligible for the average person. Like if you were actually to crunch the numbers on like, oh, what are you like losing out on by your dollars sitting in or being lent out? It's like nobody would be screeching about it, right? Like it's just because it's a big source of revenue for the people who get to hold a lot of them.
Well, what's interesting here is, the Americans actually are losing out on a lot of money from not getting fair interest rates. But it's not like stablecoins is going to change that. You could already today, high yields accounts, you could just transfer your cash to, and people don't. Wells Fargo, Chase, and Bank of America, the savings accounts all pay 0.01%.
Yeah.
And there's like free money you're giving these banks, and people still do it because banking is just super sticky.
But I do think I agree, like in aggregate. So there's been like numbers done on this. There's like people have like crunched the numbers. Like this is how much sits idle in these like 0.01% checking accounts. In aggregate, the number is very large. But part of the reason it's sticky, like at a consumer level, is because like I have a bank account that doesn't pay much in yield. Like I don't have a high yield savings account or a high yield checking account, whatever it may be. And it's because it's like, okay, if I actually at an individual level was to look at how much I'm losing out on, it's like, okay, this is not going to make a huge difference in my life, right? Like maybe it'd be the pragmatic thing to do, but I guess that to me is like what I do agree that like if you were to take everyone's bank account that is not earning much, right? Like that's a huge number, but it's not enough to move the needle, right? Like, so it's sticky for some reason.
Yeah. I think, but you'd be surprised at how many people have hundreds of thousands of dollars in cash and check in like these accounts.
Yeah, that's weird.
It's like it's actually very common, especially older people.
Let me take a moment to talk to you about Ellipsis Labs, a team I've known for a while. The Ellipsis team is one of the few that I can consistently point to and say, these guys really know what they're doing. Ellipsis Labs brought capital-efficient order books to Solana and started the Prop AMM revolution with SolFi. Altogether, they've saved retail traders tens of millions of dollars by reducing slippage on spot markets. They're bringing the same level of expertise to perpetuals with Phoenix, which is live today. Ellipsis Labs is backed by Paradigm, Electric Capital, and Han Ventures. I would consider them the foremost experts in crypto market microstructure. The best part is that Ellipsis Labs is hiring for New York-based engineers. Work with a small, focused team who are results-driven, collaborative, and use a modern stack. If you're an engineer looking to work with a DeFi team that's already proven itself in the market, go to ellipsislabs.com/careers.
Okay, so like let's talk a little bit about okay, you guys have done these reports on Lightning, and I'm kind of curious just to maybe not just Lightning, but like maybe Bitcoin development in general. What from it's good to talk to somebody who has been here like really since the beginning, because you remember a lot of the original ideas. I think that well, like what do you think of the state of Lightning or just L2s or whatever on Bitcoin? And doesn't even matter anymore. Like, I think that's where a lot of us are at, but go ahead.
It's all very good questions. And I think like my answer to this is always like a thought experiment. And the thought experiment is imagine an L2 or even imagine that Bitcoin as an L1, right? Was infinitely scalable, decentralized, and censorship resistant. The perfect blockchain. Would anyone be using it as a medium of exchange more than they are today? And I think the answer is like not much. Not much. And the reason is I don't think the lack of usage as a medium of exchange is technologically bottlenecked. It's just an economic friction. People would rather have, if you look at Argentina, right, where historically inflation has been stupid, everyone still buys things in pesos, right? Even when the inflation's going crazy, they don't save in it, but they spend it. The network effects of the payment systems are just super sticky. So I think there's just like this reality to like the medium of exchange is really, really hard to break into that, and I don't think Bitcoin is close to doing that in any material way. I think we should keep trying. I think it's a great thing what like Block is doing with Square. And I think building out these tools and Lightning and focusing on these L2s, and maybe like outside of the US, it'll be compelling. But again, like, well, stablecoins are even better for this, so yeah, that's kind of where I am. It's cool stuff. I think there will be use cases where it like continues to grow, but it's not going to be, some material like percentage of global economic or global commerce.
Yeah, I completely agree. And I think it's like by far the most, I mean, I guess people discuss it a little bit, but it's by far the most under discussed reason as to why Lightning or like just even any host of other L2 solutions that were promised or whatever have not really come to fruition is because people do not need a high velocity payment network for Bitcoin. Like it just, the demand is not there. And like, I think that alone is like at the very top of the reasons. And then like, it's 10 rungs down is, like the capital inefficiency of Lightning or like, transactions not routing properly and like weird fees and closing channels. Like all of these problems are because even with like custodial solutions, it's not like it has massive demand, right? Like that's the reality of it. So I think it's quite interesting. And also it's kind of a refutation of a lot of like the criticisms of Bitcoin, like, oh, like it doesn't have these like scalable L2s, and it's, nobody wants to use that, right? Like people primarily want to buy and hold it like at a functional level. So but yeah, but you guys do have some like type of Lightning integration, is that right?
Yeah, so we've supported Lightning deposits and withdrawals on to your River account since 2019. So just like we talked about with stable coins and dollars, it's just a rail, right? You can withdraw and deposit on chain or with Lightning to your River accounts, and it just credits and debits your Bitcoin balance. So we also used to have a Lightning external like enterprise API, which we've since sunset because like there aren't like that many potential clients. And like we used to be the Lightning backend for Chivo wallet in El Salvador until relatively recently. We weren't the first one, but we came in and sort of served as a backend kind of a year into the project, I think. And it was really cool. It was like really fun to sort of play that role and, a little bit of Bitcoin history. But yeah, we're just focused on having relationships with end clients who have, deposit accounts with us. And that's the business we want to focus on. And I think Lightning will continue to grow. There is like cool stuff happening. It's just not going to be the scale of, internet dollar payments anytime soon.
Yeah, I think that also just like going back to that like point about it kind of what is a bit of like the market has kind of spoken. I mean, I think there is long this notion that like, well, people want to do stuff with their Bitcoin. And I don't know, like to me, it seems like most people are already doing that with wrapped versions. Like to the extent that they want to do that, they're able to do that. And this like notion of it's not trustless, it's not self-custodial, all of these kind of talking points, it's not the reason. Like it seems like that's almost certainly not the reason. So that is a little bit like damning, I would say.
Yeah, I mean, I don't know. To me, I don't view this as like bearish on Bitcoin. It's just like kind of the reality. I will say, like there are some projects coming down the road. Like let's see, like Alpine Labs, like their L2. It will be very interesting to see if something like Morpho, collateralized lending, sort of on a Bitcoin native L2, starts to really get some traction and really like liquid on-chain collateralized lending and maybe like repo markets start to happen. Like that's like a maybe. Let's see. That could be interesting, but they're very different than commerce.
Yeah, I think maybe I'm just like jaded with well, not jaded, but I just like I've watched, especially with like you can just get a loan against IBIT. I don't know. I don't know. Maybe we'll see, right? Like it's just like a lot of things that were ostensibly only possible through these like trustless on-chain solutions have just been wrapped into TradFi or other chains. Like Hyperliquid does a ton of volume, even in spot Bitcoin now. It's like doing a decent bit of volume, and it's like the primary sort of bridge is like a 2-3 multi-sig, and it's like it works fine. It seems like a lot of whales deposit through this. Okay, like you guys have long pushed proof of reserves. What was like the big? So, in fact, I see like to the extent that I see you on Twitter a lot, it's like was at one point oftentimes talking about proof of reserves. Why do you think this is like a very big deal for an exchange?
Yeah, so I used to years ago be on the fence of proof of reserves. I used to think I used to sort of have this maybe absolutist argument, which was, well, proof of reserves doesn't prove that you don't have some off the books liability somewhere. And there's that kind of thing. but then where my mind really changed was around the Prime Trust and FTX blowups. And what became very clear through those was proof of reserves would have flagged these issues way sooner and maybe would have completely prevented them because of the forced transparency. The transparency it forces on a company. It sort of makes its way into like how the entire company operates. Like everyone's watching, right? And everyone knows everyone's watching. And first, like what we did was right after FTX, I asked myself, well, how do my employees know that we're not fractional reserve, right? Because like you hear all these stories of FTX, you're like, the employees didn't know, right? And I was like, well, how do my employees know? And I was like, well, I mean, if they're really in the weeds, like they would, but otherwise, like they might not. And so we started doing it internally. We started proving internally to everyone at River we had all the Bitcoin every month. And then we were like, well, if we're proving it internally, we should just publish it and do it externally. And then it's been slow to pick up, like other people doing it. Block is now doing it, which is great. I just think it's really important. It's an important norm to normalize like in the early phase of this industry. Because if we don't, I think it's going to get away from us and there's going to be a lot of paper Bitcoin. And there might already be, I don't know, like, I don't want to be like, guys saying, oh, there's lots of paper Bitcoin, that's why the price is down. But it's kind of a little weird, like how much Bitcoin is ostensibly being purchased. And, maybe we're just getting a lot of people dumping too, right? Which is explaining it. But I don't know. Like, I think that it also brings a lot of certainty to the market. That would be really nice to have.
If you had to speculate, not maybe on specifics, or maybe not on specific people or companies, but like if you had to speculate about potential paper Bitcoin out there, where would you think that might exist?
Yeah. I think actually my answer is probably different than most because I actually highly doubt that like any public company and Coinbase are making paper Bitcoin. Like I just think that's just very unlikely.
Agreed.
Especially because Coinbase custody has like segregated custody and people can see their addresses on chain.
Well, and also just side note, like they custody Bitcoin for so many different institutions. And like you would think that if any due diligence is done by any of those companies, right, like something would have come up. So like I agree. So anyways, go on.
Yeah. So I don't think it's a Coinbase thing. I think that look, the Chinese exchanges have just always been extremely opaque. I have no idea what's going on with those, and I never have, and it's always been kind of sketch. And it's like if there's anything happening, it's probably over there, or with sort of like financialization that I don't really fully understand. Maybe with not directly at the custody layer, but with weird sort of I don't know, like sort of various like sort of like leveraged or derivative type situations. But I don't know.
Your customers probably are not the most likely to have been impacted by this, but did you have any takeaways from like 1010 and the blowups there, or just like any broad takeaways from like that day specifically, and then sort of the second order, third order effects of that?
Yeah, I remember that day. We did, sort of locally, one of the takeaways from us was, wow, I'm really glad we invested a lot in like our infrastructure over the years, because a lot of people got really hard. But then it also flags like, sort of like bottlenecks in our system that we then need to keep improving. So it was like a really good stress test of our systems and flagging areas also to improve. We didn't go down, thankfully, but a lot of people did. And then to me, it was also a reminder of just like, if you're offering like leverage in any way, you're offering collateralized lending, like you got to be really careful. And there's this weird sort of tension in financial services, right? This tension between like some people say, I'll just give people whatever financial service they want. It's not my job to be like a babysitter, right? And I'll give them, if they want 10x leverage, I'll give them 10x leverage, right? And on the other hand, there's another way to view it, which is like people are putting their trust in us. They trust that like if we are offering something, it's not going to be something that can like ruin their life, right? And people, because there's like a huge information asymmetry and expertise asymmetry between like a retail client and a financial institution. And so, like don't offer things that somebody can really shoot themselves not just in the foot, like in the head with. And we sort of lean towards that, right? And so if you're offering collateralized lending, like I think that's a wake up call. Like keep the LTVs really low. If you're dealing with retail, right? If you're dealing with very sophisticated parties, like whatever institutional stuff, they're like it's big boys, right? But I think that was like a reminder for people, like how bad collateralized lending can go real quick.
Yeah, I think that's also like one of the sort of unfortunate aspects. I was talking with somebody from like one of the miners, I forget. But anyways, I was just talking about like how the problem, well, not, I say problem, like I think events like 1010 are unfortunate because there's the blow ups of people who are on like 10x leverage. Okay, like that's one thing. And again, like mostly they're aware of what sort of degeneracy can occur and like come from that. But as we attempt to integrate Bitcoin into like various financial systems and like services and extend it beyond just perhaps holding it in self-custody, like over collateralized lending, for example, it's very hard to build products around that for retail when there are these kind of like catastrophic events still. And I think a lot of us thought that the volatility would have been dampened with, right, like persistent IBIT bid, persistent MicroStrategy bid, right, like just TradFi sucking some of the 100 vol down to 20 vol, whatever, and it does make it hard. And I think it's actually really not great. Like, I don't want to sound like too bearish. I mean, I'm not bearish, but like I do think it is not ideal, really. Like when a $2 trillion asset can just rip 10, 15, 20% in minutes, like that's very bad. And also when the other thing too is like those type of things are not even that well understood in this space. Like why is a price on Binance, like why is some exchange that exists in Dubai and Hong Kong and like not really clear if it exists in either one of those places, like have this cataclysmic crash? And for the next round of participants, right, for the people that we want actively like understanding the value proposition of Bitcoin as this, I don't know, for the time being store of value or something, it's like, I don't know. I don't even know how to explain that, right? Like it doesn't seem great, like to be honest, at this juncture, right?
Yeah, I mean, I think that's probably right. And a weird thing about this industry has always been that no one really knows what the heck is going on, right?
Yeah.
There's just so many things that are just not public information at all of these venues, and like who really knows? But that said, I mean, look at the stock market, right? You have $1 trillion market cap companies that are seeing similar moves sometimes.
Yeah.
And so, and also sort of what we seem to be entering an era where volatility is just more accepted. People are just used to it more than they would have been maybe 20 years ago.
Yeah.
So I don't think you're wrong, but at the same time, like, I don't think we have much of a choice.
Yeah. Do you have any thoughts about this cycle though, in general? Because like if you bought from, like, obviously, and this seems lost upon people for understandable reasons, but like if you bought at between 15 and 20K, like after the last sort of FTF stuff and like at the bottom there, then yeah, you saw 6, 7x, right? But it has felt a bit muted. And I think that one thing with regards to this like downside volatility is that you, in terms of sort of expected values here, you want the upside volatility as well. And I do wonder, like, do you have any thoughts about, maybe just a cycle in general, like the number we hit, and like, was it disappointing, or like, I don't know, what have you seen maybe from your side?
I mean, I think I looked recently at the stock to flow chart. I haven't looked at it in a long time. And it's sort of, I think, like the first time it's really not sort of following.
Yeah.
And, I think, has the price action over the last year and a half been disappointing? Yeah, for sure. I think anyone would say that. Have the first principles changed? I don't really know. I think what is different right now is that a massive technological revolution, like potentially the scale or larger than the industrial revolution, is happening, and like kind of sucking the air out of the room with the AI stuff. And I think that's part of it. I think for the last 10 years, one thing that this industry had going for it was kind of the cool new thing, and it got a lot of attention. And now it's not, right? And now it has, and now everything's going back to first principles. And the good news is, I think, for Bitcoin, the first principles are still there. The sort of store of value first principles have remained unchanged. I think for the altcoins is the road where the pain is really being seen, where the first principles just weren't there to begin with. They were relying on sort of the mimetic, like, I'm new and interesting thing to fuel the demand, and that's now gone. So yeah, that's my take. I mean, yeah, price action has been disappointing. Do I think it will turn around eventually? Yeah, I do.
Yeah, I think the one thing, like a lot of the kind of bearish sentiments that you see on Twitter or wherever we get them, I think like I take them into account to some degree. But one thing I do take more into account is like a few people who I think I generally respect, who I see not disavowing Bitcoin or not believing Bitcoin anymore, but I think I see more people thinking it's just another asset and it's just another like small, chunk or slice of your portfolio. And yeah, that is the only reason I point this out is because I don't think these people were like that before. I think that and I don't know that I agree, but it's interesting to see that from people who I thought before like very much viewed Bitcoin as ultimately this like apex asset, right? Like it will suck all the liquidity on the grounds that it's like most, provably scarce decentralized store of value. And they almost have like taken kind of like, well, you own a little bit of IBIT in your portfolio. And that is something that I do think has changed a bit, at least from previous opinions.
Yeah. And I think that sort of a more broad thing here is going to be like, what's the end state look like? I don't think the end state is that nobody invests in anything other and only has Bitcoin, right?
Right.
I think that
actually,
yeah, that would be bad, right? So I don't actually think it's unreasonable to go, hey, I want some exposure to AI, right? Like,
right.
Thing is maybe changing our civilization. Like, I should have some investment exposure to this. And so, yeah, sort of my view is like Bitcoin, in a way, right? The more mature Bitcoin gets, the more boring it gets, right? The more it becomes a sort of default treasury asset for either you or your business. I think like Bitcoin's terminal state is not being cool, right?
Right. Yeah.
And that's okay. That's actually what winning looks like, right? Winning looks like not being cool and being this place that if you want to go, I want to preserve this chunk of wealth through time reliably, I'm going to put it in Bitcoin, like maybe someone had historically did with gold.
Right.
Maybe there's this, the payments thing is a second wave for Bitcoin at some point in the future, when the dollar has serious problems, which, by the way, is probably inevitable. It's just really like it could be in 10 years or 150 years, right? It's really hard to say. So these things don't really worry me. I think maybe the question for in terms of like an investment thesis is how far are we from full price discovery, right? Like, has Bitcoin reached its full potential as a store of value? And I think the answer is no. I think it's quite far away from that. So that's my nuanced take.
I think I agree, and I think like it should at least flip gold, because so I think that's like a very reasonable target. In which case, there's quite a bit of room to run. It does feel like that would be like that feels like an astronomical price surrogate in current maybe vibes or context, but I still like feel similarly. That said, you brought up gold as sort of a comp, perhaps, and has long been, right, like one of the comps. One thing about Bitcoin is like this idea of self-custody, and this is like what has largely set it apart. And a lot of people talk about how gold failed. I think that's probably much lower than the fact that it's not very easily transmittable in a global economy, for what it's worth. So like, I don't think it's such a great point, but there is some validity to the fact that very few people actually self-custody gold, and that but so on that note, what do you make of the self-custody in general? Like, my thought is that self-custody as a percentage of people with exposure to the Bitcoin price is probably trends down only, but self-custody, the sheer number of people self-custodying by adoption, just level of adoption, should trend basically up only. But I don't know if, I guess some people think that this is like cataclysmic. I don't, but it's at least a point worth, considering. Like, what do you make of like sort of self-custody now? And do you recommend people like take self-custody at this juncture,
Yeah, it's a good question. The way I've always viewed it, and it's mostly stayed unchanged, has been what's not important is that you do self-custody. What's important is that you can.
I agree.
Right. And it's like the fact that a Bitcoin exchange needs to have this big door out keeps it honest.
Yes.
And that's what's important. And so, it's not like we're close to some heavy scaling bottleneck where the vast majority of people who want to self-custody can't, right? We still have a long ways to go there. Like, sure, there's going to be technical problems to solve if it gets really popular, but that's my view. At the end of the day, like, I'm not sort of the ilk that will claim that the future is, living in your citadel, with an armory to fight off, everyone else, and everyone's going to be like, this hyper adversarial sort of like lifestyle. I think it's like silly, frankly, and I think it's there's a deep lack of sort of understanding of like the spiritual, the philosophical, like what civilization even is, like with that worldview. And the reality is, like, civilization depends on institutions that you can trust. If you don't have that, you don't have civilization. And so, what I've always viewed Bitcoin as being a reformer, right? Not a destroyer. Like, I think Bitcoin is a reforming force for institutions, not something that like deletes them.
Yeah, it's like a check on the power, right? And that's like the most like reasonable take. I do wonder though, from a technical perspective, I haven't seen, maybe I'm not following closely, but I haven't seen massive improvements or unlocks with regards to self-custody since, like, I don't know, ever. And I wonder if in your mind, can you envision anything that would be like, I mean, multi-sig, share custody, like all of these ideas have functionally been around for quite some time. And it's hard to imagine like what would be a 0-to-1 unlock there. And so I don't know if you have similar beliefs, but like it doesn't seem like anything would be, right?
I think it's similar to the medium of exchange thing. There's no force pulling this innovation forward. Like, you have, for example, like Block has done a great job with Bitkey. It's probably the most usable.
Yeah, I have one. Yeah.
Right. And so, okay, great, awesome. I like a great, like they did really great work there. But again, like, I think you have to look at all these things as what's the economic force pulling forward that innovation, and that really doesn't exist for self-custody. One of the reasons that self-custody for crypto was really big is because it wasn't about keeping your assets safe and away from institutions. It was about unlocking financial transactions and activity and trading that you without oversight, that you couldn't have done without self-custody, right? So the reason Ledger got huge wasn't because lots of people want to keep their Bitcoin safe. It was because, I can now trade on Uniswap and the IRS won't know about it. And that's why I think the innovations in like self-custody really hit crypto, and not Bitcoin.
Yeah, but I mean, I think even those are being like, with every subsequent hack, every subsequent like mass contagion, black swan event, I think fewer and fewer people are wanting to even engage with that domain, which honestly kind of is like bizarre given the selling point of like on-chain financial primitives and stuff, right?
I think at the end of the day, the reality is, you don't want that mental overhead in your life. Like, the point, like, part of the reason that, people, use us is because we're professional hot potato holders, right? No one wants to hold the hot potato. They want to give someone else the hot potato. And what an exchange is basically saying is, I'll hold the hot potato. That's going to be my business. I'm not going to drop it. I'm going to keep it safe. And you can delegate that to me. And that's an incredibly valuable thing, to most people. They don't want that responsibility over holding their wealth and keeping it safe from every sort of risk. And when you self-custody there's like an impossibility result. Either you're trusting someone else with your money, or you are fully responsible for anything that happens to your money. And most people would prefer the former.
Yeah. Have you like kind of going along the vein of, talking about what self-custody enabled? Have you followed, I mean, I'm sure you have a little bit, but like some of the stuff outside of Bitcoin, like I mentioned Hyperliquid. Do you view this increasingly permissionless open system like something like Hyperliquid? Like, does this seem like the future, the way that maybe not that you engage with, but that you envision it could become?
Yeah, I mean, I think that the steady state of the future is probably like a lot of real finance stuff happening on chain, but like everyone who was originally in crypto gets frustrated that none of that value is accruing to any token. And the reason for that is like, what are blockchains really good at? Blockchains are really good at regulatory arbitrage, right? Where do you really need that? You need it for your money. And you need it for any other financial transactions where you just want to like this frictionless way to do things without all of the, paperwork from wherever you're trying to trade, right? Like, wow, I can just like with a click start trading oil futures instead of needing to navigate some monstrosity of like a bureaucracy at JP Morgan. Yeah, amazing. Like I don't even have to KYC, even better, right? Like that's not going away.
That seems correct to me as well. I guess I just wonder, like, have there been any other innovations in your opinion with regards to Bitcoin, or is this like all? Have you seen anything else, exceptionally useful that the reason I ask is like, right, you come from like 2013, 2014 era where it's like everything useful comes to Bitcoin, right? And then what exactly has been determined to be useful? We have like roughly 15 years now of this. And so because that was one of like the arguments, right? And so now I kind of,
it wasn't an argument that I've ever made, or I quickly became disillusioned of quite early. Even in the early days of like Blockstream, where sort of they were talking about side chains and smart contracts. Even back then, I was already of the opinion, like, I don't see really the value of a smart contract for Bitcoin. Like, okay, like some other chain where you want to do some trustless trading, like fine, all right, whatever. But like for our base money, it just doesn't seem like, why? Like, what's the point? And because you always had this issue fundamentally that everyone seemed to just hand wave away for a decade, which is like anything useful has to be pegged to the real world. So you need these like trustless pegs in, and it's like at that point you're like, well, what are we really doing here? And so, at the end of the day, anyone wants to sell that stuff in dollars anyway. So it's like, I've always been like, Bitcoin is boring. That's a feature, not a bug. And that's why it's going to succeed.
Yeah. I think that's funny you say that, because I think you could like just trace so much going up the layers, like this Oracle problem, which has been understood since, like, I don't know, 2012 or something. Once you realize that you are going to be forced to trust something, like even if it's a quorum of people who all, report the Binance price, like the fact of the matter is, it just loses a lot of the, right? Like, it's like, well, Chris, why are we even making this like complicated to begin with? Like, why don't we just do it on a centralized database, right? Like, so the interesting other kind of inverse of like everything will come to Bitcoin though, is that a lot of the original selling points of crypto was that like so much couldn't be done on Bitcoin, and so they had to do it elsewhere, right? Like Vitalik couldn't get Namecoin to work right in the way he wanted, and like this expressivity and Turing completeness, all this stuff, and then most of the stuff that's garnered product market fit is like all pretty trusted now. It all requires like fairly high levels of trust. I mean, like, look at the breakout application or like chain, I suppose, of this cycle, Hyperliquid, right? Like, it's certainly, so that's kind of like interesting inverse, right?
Well, and this was the psychosis of the whole thing, right? And I think like you have a lot of people who are like finally realizing like, hey, like maybe I was wrong about everything, right? Blockchains are not useful for many things, right? You're either using it for base money, in which case it should be boring, and very decentralized and very hard to change, or you're using it for regulatory arbitrage around existing real things that people want to do anyways, and in which case it's just a Rube Goldberg machine to get around laws, right? Like you don't need tokens. You just need the Rube Goldberg machine. Everyone was just lying to themselves for 10 years and trying to find problems for their solutions. And, you had this like psychosis. You had like these very intelligent, otherwise intelligent people who go, there must be something more. Like it can't just be Bitcoin. There must be something. Blockchain must unlock this vast new world of things. Otherwise, like they couldn't accept that, like, no, maybe it just doesn't. And that's okay. And I never understood why like everyone felt like there had to be something more.
But you say that like people are realizing this. I think it's much more subtle. Like I don't see hardly any contrition. I think that like part that if anything that's like what's somewhat jading is like you don't really see, not even contrition, just like humility. There's like a real lack of humility with like the billions of dollars that went into this stuff that just did not work, and for reasons that were discussed prior to it not working. And these people are still the thought lead. I mean, to the extent that there's any thought leaders, like I think most of the outside world doesn't necessarily view these people as thought leaders, but to the extent that there are, like there's very little, oh yeah, like maybe that was wrong.
Well, and I think the reason is sort of self-selecting, right? These people raise lots of capital from other people, and admitting, hey, I was totally wrong, and by the way, I lost $1 billion.
Or in 2021, they made $1 billion and they were totally wrong, which like nullifies their intelligence, right? It's like, oh, we accidentally lucked into $1 billion, right?
Well, exactly. And I think, you have a lot of people who got rich being wrong.
Right.
It's actually really bad in a way that's a curse for them. I actually feel bad for people who got really rich being wrong. Because it's really hard to, well, no, like it actually, like, no, actually, like I know, like, yeah, like Crimea River, but like it kind of stunts you. Because it's really hard to do anything real after that.
Right. Yeah, that's true. Yeah.
I don't feel bad for them, like, like economically, but like sort of spiritually, it is actually a little bit of a curse. And so I think it actually probably, the net cost of the crypto thing hasn't just been like the capital lost, it's the opportunity cost of all of the capital and the minds that could have been working on something really interesting for the last 10 years. But instead we're trying to figure out how to like, Rube Goldberg machine and convince, retail investors to buy their like token. Like, what if they were working on like more advanced turbines instead? Yeah. Like, where would we be? Right. It's really kind of sad.
I agree. I guess the one thing I would, like, we've said this about many industries in the past, like Wall Street, like the brain drain to Wall Street, to banking and private equity and hedge funds. Like we've said this. So I agree. And it can be correct in both cases. But yeah, I mean, like such is the case when there's potential to make very, very large sums of money in short periods of time. Like you're always going to kind of have some, like brain drain there. I think the thing too, people talk about, they talk about this less, but like there's obvious problems to kind of companies, projects being liquid much earlier than they should, which was the case with tokens.
Yep.
But one of the things that like I think is becoming, maybe not to many people, but more apparent now, is that in terms of admitting you're wrong, I think it's very hard when you still have locked bags of these things for a very long time, or maybe not even locked, but you just can't actually get liquidity out because you have such a large amount that like it's very unrealistic to be able to get money out. So you kind of have to stand by these projects in teams, which is admirable in like, so in Silicon Valley, this has kind of been a long-standing, like you want to get investors who will stand by you thick and thin, right? And like they're your ride or dies. So like this is already kind of ingrained in the venture mindset. So I think there's some sort of like admirability to that. But the thing is, in crypto, when these tokens are unlocked, like I don't think many VCs are publicly standing by Theranos anymore. And like Juicero, like these horrible ideas. It's like there's a forcing function in the market where they just go out of business because they run out of runway. But in crypto, you still have bags of these things, right? So you're sort of like forced to play the euthanasia roller coaster game for as long as the liquidity is still there or some semblance of liquidity is still there. So like I think that is one difference. That's another thing with like these projects being liquid way before they ever should, or they probably should never to begin with, is that like you're stuck holding this both literally and figuratively, right? Indefinitely, effectively, because it's a public company.
Totally. Yeah. No, that's a great point. And I never thought about that, but yes, there's this like zombie sort of coin phenomenon holding a lot of people hostage today.
And the thing too is like with regards to this, I've actually thought about this a lot recently, as you can tell. Like the zombie dynamic is true as well, because like the marginal cost of running these things is at times like functionally zero. You need like one server somewhere to basically run a node. So the incentive is to keep it alive, to just get as much as you can out. Like there's not much incentive to shut it down. It's to keep in, like a lot of them have huge treasuries, huge marketing like spends, right? Where it's just like, let's just keep this going for as long as possible. Whereas like in the real world, like nobody would keep funding this type of thing, right? Like it would run out of runway. But
Exactly. Yeah, no, it's a great point. And I gotta jump soon here.
Okay. Can I ask one last thing quickly? Quick thoughts on like quantum, because this has been like one of the bear like how are you guys approaching quantum, and like do you think it's had really any measurable impact on price, or we just like kind of try to ascribe narratives to reasons that stuff is happening?
I think it's had some impact on price and has introduced some like sort of uncertainty into the market. I think it's died down a bit, and I'm confident we'll get past it. I think that we'll converge on a new quantum secure algorithm. I think more likely than not, it'll be many years until a viable quantum computer actually cracks ECDSA. And so I think we're on a good track. You know, the serious minds are on it. It's much riskier. And I think any like cryptographer would agree. And Dan Benet just did an interview recently where he really stated it clearly, which is like rushing this thing is way riskier than spending the time to get it right. And so we have the time to get it right. We should spend the time to get it right. And I think it's going to take a few years, but that's okay. And so I feel like we're in a good place.
Awesome. All right, Alex, thanks so much for coming on. Really appreciate it.
Well, thanks for having me on the show.